conversation. And just try to keep that in mind, but we're going to give you some good themes and really get you thinking maybe a little differently about how you manage your money. So as we get into it today here, and I had to jump ahead there, sorry about that. As we get into today, I want to just make sure everybody, I know we have a lot of people that are our clients, they work with us every day. Thank you. I'm glad you were able to jump on and get some of this value. But we're also going to be talking about a little bit about what we do as a company, just so everybody's up to speed. So we help small business owners hold and juggle all the hats. And this is actually true. One of our advisors was willing to go up in front of the screen here and let us grab a picture of him, which came out great. But this really articulates, this is what we do on a daily basis, because when you learn all these different hats, it's impossibly great at all of them. And so we've really honed in and built all the training and all the items needed to help grow and scale a business from 0 to 10 million, from 5 million to 20 million, no matter where your journey is at. This is what we do on a day-to-day basis. And we're going to be bringing you a touch of some of this content that we have that we're using every day with our small businesses. Again, normally we work with our advisors on a one-on-one basis for so many hours a month, and we help them hold the hats, help them actually make implementation of these things. So keep that in mind as we go through this today. I'm giving you some initial content to get your head wrapped around it. If you're a client with us, go back to your advisor, continue the conversation, figure out how to bring that on a one-on-one basis to yourself to help your business. If you're not a client with us, we'd love to have you, but make sure you at least find somebody to work with you on this to get this implemented if you don't know how to do that already on your own. So let's get moving here. I apologize here. I seem to have a few issues here getting the screen to move. Just give me one moment. All right. So we're going to stop share and share back up here. Sorry for the technical difficulties here. All right, so we're going to walk through the roadmap here of what to expect today. And the first one's going to be fundamentals. This is really in regards to what does it take to understand the fundamentals of financials. We're going to get into what type of equations to use. We're also going to talk about how do you break down the different common language and know what you're referring to. We got to get everybody on the same page before we can get into some of the more complex items. Additionally here, and give me one second, I'm really having some issues here getting the next screen to go. So I'm so sorry here for everybody's patience. We've done the test a bunch of times and there was no issues. So I'm just gonna hurry up here and we're gonna close out PowerPoint and let it restart. I'm gonna go ahead and keep talking though, because I know generally where we're headed today. So as I'm pulling this up, we're gonna be talking through how do we appropriately break down then in terms of the systems. How do we actually get into systems that are reoccurring that will allow you to drive essentially consistent programs that will help you manage and keep financials accountable so you can actually hit the targets you're going after. And then I'm also going to get into some processes that might be set tactics when it comes to actually planning out your financials. And that's really something that we want to focus on, because without the right plan, without knowing your budgets, without having the right details in place, you're going to have a really, really hard time figuring out essentially how to drive the right decisions forward that are going to allow you to be successful on a day-to-day basis. Because financial planning cannot just happen in the moment. It more importantly has to happen throughout, ongoing, on a monthly, on a weekly, even on a daily basis. And so I've got my PowerPoint back up here. I'm going to go ahead and jump right in. And hopefully everybody can still see this. Looks like we're good. Let's give it a quick check. We're good. Okay. So here's what I want you guys to do. I've just kind of walked you through what we're going to cover, which are these three things: fundamentals, planning, and systems. If you have something specific that you want to get out of today, I'm going to ask that you go ahead and jump into the chat room and go ahead and tell me what are some of those things that you want to see happen. So jump in that chat room now here, and then we will get started here in just one moment. Thanks so much. Guys, I'm just changing a computer here. Give me one moment here. Apologize again for the delay. You never want these things to happen, but sometimes they do. All right. So we're going to do something a little unorthodox today. We're actually going to just show the PowerPoint slides here as we're getting going. It seems like it's going to give me a little bit more control so we can run. I apologize. I'll take this up with Microsoft, but I want to keep us moving. You guys have got some good things here in the chat room that you want to get over. So I'm hearing strategies to improve our sales. I want formulas. I think that'll be interesting. A little bit of risk management. That's a great ask. Mark just looking for some best practices. Great. Maximize. So do we raise prices? Do we lower our costs? What's the right way to approach this? Good. We're going to talk about a lot of these things. There's a few things that we may not get to. One of the really cool parts, though, is that we can actually have you jump in, and a couple different options here. There is a Q&A button if you want to look for this. So you can not only just have live discussions on chat while this is going, but you can also use the Q&A function. You can ask a question, and we have advisors standing by, ready to help answer some of those questions. So if I don't go fully deep enough on something that you were really hoping I was going to hit on, what I'm going to ask is that you go ahead and put that into the Q&A, because if we can't get you an answer while on the webinar, we're going to do the best we can to actually follow up with you and give you that information. And I just want to remind everybody now, before I get into this content, again, everybody's at a different step in their journey when it comes to managing financials. And what I'm going to ask for each of you to do is to actually realize that you're only looking for 2 or 3 changes you can make. You can't judge this webinar and go, well, everything here wasn't new. It shouldn't be. You should already be doing certain things with your financials. I hope you are. What I've done is I've curated content from all different walks that'll help hopefully apply to some advanced, but also some beginners. So just realize where you're at and know we're just going to take a step or 2 forward. So I'm going to get into it. This is one of my favorite quotes when it comes to managing financials. It's business must be run at a profit, else it will die. But when anyone tries to run a business solely for profit, then also the business must die, for it no longer has a reason for existence. And I so commonly get to meet a lot of our small business clients, and I hear about what their goals and aspirations are and what their vision is. And maybe you can relate to this, right? It's not always about the money. But without the money, you're not going to be able to continue to grow and make the impact or whatever other vision you have for your business. So financials, unfortunately, unlike sometimes marketing, sales, or other areas of the business, it's not an if, it's a must. You have to be doing these things to manage your financials. Otherwise, you can put yourself in some really dire situations extremely quickly. And there's the equation, right? There's the equation that everybody knows, and it's revenue minus expense equals profit, right? Revenue minus expenses equals profit, but that's not right. How it really goes here is revenue minus profit equals expenses. And I want you to think about that for a moment. How often is it that we get to dictate exactly what our profit's going to be when we just spend and we don't really know exactly why we're spending? Instead, I want you to flip your mindset today with me. I want you to approach your business in a way of saying, my job is actually to figure out what my profit is minus my revenue, and that will give me what my allocation amount of expenses are. And that's a different way, a different lens, or a different paradigm to approach this with that'll really, really make a big, big difference. And that's one of the reasons why I want to make sure that that's part of it. Now, as far as it looks like I've got my clicker going here, so thanks for that. So to help articulate this story, I'm going to talk about my first business. I'm going to tell you what I learned about financials and where a lot of this training came from. And I'm going to talk about when I first started a business, I thought I was going to make it rain with money. I'm sure some of you can really relate to that experience, right? That you're starting a business like, I am going to be super well off financially. And then this next thing happens, right? You realize, holy cow, this is a lot harder than I thought. I'm sure some of you are reflecting back and kind of chuckling to yourself, which I know I do when I think about it. And these were my first year numbers. I worked 1,600 hours on my first business, and I made $9 an hour. Now, according to the government, I did really well because only 30 to 35% of companies are even profitable, and 80% of them go out in the first 2 years. But I was devastated. I worked so hard, and I made $9 an hour. I should have literally gone and worked a minimum wage job, and I could have made the same amount of money. That is a hard pill to swallow, and you can imagine what my face looked like, right? This is how I felt. It was infuriating. I had to make the decision to overcome and go, I'm going to do this again. And so I had to make this decision to never give up. I had to make this decision to put my hat on and go after the prize that I wanted, because I had to start to look at all the financial data. The reality was I just assumed my first year, if I worked hard, I did a bunch of revenue, I was discounting, I was doing all kinds of stuff. I was not in the details of my money at all. I couldn't tell you what transactions were going in and out. I couldn't tell you if somebody charged me 3 times. I probably would not have identified it. And I know a lot of people on this call can relate to this. And the reality is you have to watch it. You have to get in the details, and you also have to plan it. So what happened year 2 was I did that. I invested and I spent an hour to 2 hours every week on my financials, running models, running through every transaction, tightening, having very clear budgets. I got into this process I'm going to walk you through here in a moment, and it was so much better. I made $33 an hour, and I only worked 1,100 hours. See, I had this mindset that I could work much smarter versus harder. And it's true, I did make more money with less time, and that's exciting, but what was really fun was in my year 3 when I actually went back to working a lot of hours, and I was able to really, really rise the amount of money I was making on hour per hour. And this is something that I encourage every owner on the call to do. I am constantly on a monthly to quarterly to yearly running the analysis, how much am I worth? And if you've worked with us on any type of time management, it's usually the exercise we start with, and we ask, well, how much do you want to be worth? Because that's going to dictate the type of tasks that you're going to do. Well, the same happens in financials. You have to think about, what do I want to be worth to get paid as the owner? And then you have to think about, what is the return and what's the profit going to be for the company? And those are the 2 variables you're going back and forth between trying to figure out when learning how to drive and run the financials of your business. And you can imagine how I felt when I finally got here. Just to seal the deal, I officially felt the rain for that one time in my life. Obviously, it wasn't a ton of money at the time for me, but it was really, really something cool to be able to experience and realize the fruits. Because I estimated that majority of the money I made was just because I watched the numbers and I made sure I made the profit from all the work done. So it's just kind of a fun story to get us in and get you reflecting about, where are you at on financials? Now let me walk you through some of the learning and make sure we're all on the same page. So as I said, we're going to start with fundamentals, all right? And again, just a friendly reminder, if you're really advanced with financials, this part's not going to be that interesting to you. Stay with me. We're going to get to some more advanced sections here in a little bit, but we do have a very wide array of participants here today. So this is what we continue to see. We have this really interesting perspective and lens that we get to look at tons and tons of small business owners all across US and Canada that operate very differently. So we get to see a lot of different ways people operate their financials. And I've just kind of sucked this down into 4 personas. And there's more than this, so I hate to put anybody in a box. I know entrepreneurs don't want to be put in the box, but I'm going to show you the 4 here. And these are the 4. Financials are a black hole. It's just, I don't even want to think about it. That's who you'll relate with. I just don't even know where to look. I don't know where to start. They're just literally something that I just hope there's money. I just wait to see at the end of the month. I hope there's money there. Number 2, financials are just managed reactively. It's not that you don't manage your money. It's just you only look in the past. You're never actually looking forward and actually using all that historic data to project or to make performas that are going to allow you to see the future of your financials. Number 3 here, you have some financial plans and you also use budgets to dictate, meaning you're the opposite. You actually don't look in the past. You don't take a look at where your financials have been managed from. And you instead just always keep making new financial plans and keep setting budgets, but you don't actually look back to allocate to know, is that the right budget? So kind of either side of the spectrum. And then 4th or finally, your financials are actually led by a CFO, and you've got systems in place and you feel great about your financials. You're fully in scale when it comes to financials. And we absolutely need people like that. So these are the 4 personas that we see. And what I'd like for you to do is we're going to launch a poll. I just want to get an idea of, who do I have on this call today? Which one really articulates who you are and that you can relate to and go, this is where I'm at in terms of persona. So we just got a lot of responses here coming through. Ooh, it's evening out. It's a close race here between the middle 2. Got a few on the line that do have their systems and feel really good. Awesome. So we've got a couple of really advanced folks here. Looks like most people here, we can go ahead and post those results here. It looks like we've got majority. It looks like most here are, 57% financials are managed reactively, 30% financial plans are in place and budgets are defined, And we do have a few people on both sides that either have the systems at the extreme and they feel really good, or the financials are a bit of a black hole. So as I said, we do have a pretty wide array of folks today. We're gonna go ahead and stop that poll here. So thanks for that. All right, so let's get in to make sure, as I start to work through some of this training to help with some of those personas, I need to get everybody clear on how do you break down financials so we can use the same common language. And again, I bet half of you know this, and I bet the other half may not have seen this as clearly laid out. So you start with revenue, right? And now once you go to revenue here, boy, I keep having a lot of issues here once we click off. Sorry, everybody. Take care of it 1 second. One moment. Sorry, everybody. Give me 1 second here. I apologize for the delay. I'm not sure what I'm doing wrong here. Never seen this before. We're going to keep it like this just for now. So I'm going to break this down. Revenue minus cost of goods sold equals gross profit margin minus fixed overhead, that's your expenses, equals net profit. And I want to make sure there's two things that we're clear on. Cost of goods sold are expenses that exist in order to produce the product or service. I'm going to give you an example here in just a moment. And fixed expenses, well, that will exist regardless of the quantity of sales generated, okay? So again, you're talking foreign to me. I don't understand these. I'm going to give you an example here in just a moment. But I often hear business owners say, well, this is my margin. And my response to you is always, which one? It's very important. Are you talking about your gross margin to make business decisions on? Or are you talking about net margin that actually goes in your bank account as a business? And that's extremely, extremely important that you understand what that looks like between the two of them. And so again, I just need to get everybody on the same page here. And what we're looking at here is how do you actually break down revenue? So I'm going to take each one and break it down. And to just use a simple example we can all relate to, I've chosen to start a lemonade stand. And the first thing I realized is that I have to be open 240 days a year. So I've set the hours. There's 2 months. The winter is just way too crazy. So I have 240 days a year that my lemonade stand is going to be open. I'm going to be open for 6 hours a day, which is 1,440 hours. Just trust my math there. And I have to sell an average of 19 cups an hour, which is 27,360 cups a year. And my average transaction, most people would think it's $3.16 based on the small, medium, large being averaged. This might be a quick point for people, but you have to average by allocation. So I sell 45% of the cups at $2. I sell 35% of cups at $3.50 and 20% at $4, which actually gives me the average of $2.93. Now you may think, oh, $2.93 is an average versus $3.16. That's not a big difference. It's actually a massive difference. It'll add up massively over time and scale. So having a bit of clarity around what your average order is to make up revenue and all the details and levers that go into your revenue, these are the kinds of things you have to figure out how to break down for your business. So when you financially plan, you're able to look at this. I also always encourage you to work with your bookkeepers and accountants that when you are getting your financials ran, you're taking all this and not just looking at the money, you're actually connecting that to some form of a KPI document that shows you how many hours, if you're in the professional hourly services, how many products, whatever types of widgets you're dealing with, you want to be able to break down these levers every month when you look at your financials the same way that you do when you look at revenue or when you look at profit. So I don't look at revenue and go, oh, I have $80,000 in revenue for the year. Well, what the heck does that mean? I need to know the inside elements that break down how I got to that revenue. That's what starts to give you control in financial planning. So that's the definition. I think everybody's clear on what revenue is. So I'm not going to spend more time there. I'm going to slow it down a little bit on cost of goods sold. And this is just a fun example again with the lemonade stand. So I started thinking, well, what are all the things that I'm going to have expenses for? And again, remember, these are expenses that I will never need to spend money on unless I most likely have a customer. They should fall variable based on the amount of revenue coming in. It should be allocated for in terms of expenses. Meaning, again, if I don't have a customer, I don't need ice, all right? I don't need ice. So I'm gonna have to buy the cups. I'm gonna have to buy the ice. I'm going to have to buy the sugar, the lemons. Don't forget the credit card fees that are going to pull because I'm going to have Square credit card processing rolling at my stand. So I'm going to spend 37.8%. And I should be able to get this percentage pretty locked in to where on a consistent basis, I'm probably fluttering between 35 and 40% depending on the week and when I order cups or when I order ice because I might order in bulk. But this is going to be the percentage, meaning I know, right? I know that I'm generally spending about 37 to 38% to run my product. Getting extremely clear on that number is crucial to be able to work the rest of your financial planning. And again, I'm just bringing everybody up to speed if you don't know how to calculate this. So I want to go to another poll because I just want to know how many people do know their gross margin. So we're going to launch this poll here. And I just want to see what people have in terms of, do you know how to get to your gross margin, meaning your revenue minus your cost of goods sold? And I want to know, how close are you in the proximity to that percentage? If I were to ask you, what is your gross margin? Give everybody just a moment here. Okay, let's go ahead and publish the results here just for purposes of time. So majority is I have no idea, which doesn't surprise me. We have a few that absolutely are within 1%. Rock on to you 5, that's awesome. Otherwise, majority here are within the 5% or 10% if they're not having any clue. Well, good, you need to sit down and figure out what are the expenses. What are the expenses that you have to take on that really only exist as variable costs, in this case, cost of goods sold. And that's a pretty easy action to take. And if you need some help, we're happy to help you with it. Just let us know. But that is something you want to get figured out because we're going to build the rest of the financials off of that. Now I'm going to keep going on my lemonade example here just for a few more slides, again, just to get us all up to speed before I get into some more intense things. Now I have my fixed expenses. So my margin, right? My margin is around that 63%. Now I have to remove my fixed expenses. These are the expenses that it doesn't matter how successful I am. I'm still going to pay for these things, right? I have to buy the stand, the jugs, and the basket. It's going to cost me $1,400. For some of you, really into financials, I'm probably going to depreciate that, right? And do that over 5 years, but we'll get to that another day. I'm going to have to buy a state license so I can give this lemonade out on the sidewalk. Now I have labor. Now I'm going to work 720 hours, I'm going to work half of it, but the other half of the hours are going to be worked by my employee. I have to pay them $13, and then including taxes for employer's tax, it comes out to $93.60. And then I have my marketing. I have a cost of acquisition I have to plan out. I can afford to spend 30 cents per cup of what I hope. But the problem is, why is this a fixed expense? Why don't I put the 30 cents per cup on the cost of goods sold? Because I'm going to have to spend the marketing beforehand to know if it's going to work out. I don't know if it's going to work. I have to market. I'm going to put that risk out there, but I'm comfortable with the risk and the allowance of 30 cents per cup. So this is a big lesson. Know what you want your cost of acquisition for marketing to be per widget, whatever that widget is for you and your business. And I'll just throw in another miscellaneous about $1,600. But I think if I had these expenses, I could successfully run this lemonade stand. And that's going to be about $20,748. So I have my revenue at $80,000. I've now minus my $30,000 of cost of goods sold, which was not very risky in cost because it's inventoriable. I'm able to go back and I really wouldn't exude that cost unless I had the clients. And now I've really reduced the risk, which is this $20,000. I've got enough revenue to overcome that. This is where I constantly hear small business owners say, I don't understand, I'm doing revenue, there's just no money left in the account. So here you can see it. Here's the final breakdown. Revenue minus cost of goods sold gives you your gross margin. So if somebody was to say, what's your margin? I would say, which one, gross or net? If they said gross, I'd say, we usually bring in about 62% before we reduce our overhead. Now we bring in our fixed expenses, and that leaves us with our net margin, $29,000. So not a bad business. I've got a 36% net margin on this revenue. Now, I also get this question a lot. I know my advisors do too. What should my net margin be? Totally depends on the industry. Totally depends on the volume, how much you want to scale. Every model is different. I wish I could just say, this is the number. I can't. Every single business is unique and different, and that's why you have to have someone that's good at financials, get in and figure out what's realistic in terms of the model. You can absolutely do some market analysis to figure out what other companies in your world is. I always recommend hiring a business valuation firm to do a little bit of a research project for you to tell you some of that if you really want to get the details. But again, that might be more for some of the advanced here that are on the call today. So now I showed you, I'm going to flip back and forth. I showed you the year, but again, that's not helpful. You really need to know your financials based on per widget. So notice I took back to that revenue. This is per cup. There's that average, right? $2.93 is the cup. The cost of goods sold is $1.11, and the gross margin is $1.82. And this is how you connect your financials to sales. This is how you push that all the way through. And so you can see, I just gave you a couple examples. The one in the middle here, that's the plan I showed you. That's what I built the financial model off of. I got to get to 27,360. But you kind of want to swing both ways after you run that model. You need to actually look to the left and go, what happens if I don't quite hit those sales? Where am I going to fall to? So if you fall, and let's say I got all the way down to only 11,400 cups. And everyone, keep in mind, I'm on track to 11,400 cups of lemonade sold 3 months in. Because instead of selling my 19 per hour, I'm only selling 13 or 12 an hour. So you have to have your head up. You have to be watching. Are you on track with the financial model? Because I could have probably lowered my fixed expenses if I just would have realized I'm not selling enough cups. But instead I didn't. I spent the same amount of overhead and I ended up with $0 in margin. And this, my friends, is the break-even point. BEP, break-even point. You have to know what your break-even point of revenue, margin, overhead. You have to know how many widgets you need when it comes to deciding on what is your break-even point. It is so incredibly crucial that you understand what that looks like. And so again, classic, I just want to understand who has this break-even point on lock on a per widget or on a per month or quarterly or even yearly basis. And let's go ahead and throw this poll up here for everybody to jump in. So where are you at on your break-even point? Do you not know it at all? I know by widget, I know by month, quarter, or year, or I know by all of them. I feel really comfortable that I know my numbers per widget as I break them down.
Hey, Casey, quick question from...
At first glance, it seems pretty similar to the margin. So it looks like a lot of people, if they figured out their margin, they figured out how to bring it down, into these different, kind of widgets or timeline of frequencies. There are a few, though, it sounds like, that had the margin figured out, but they haven't connected this to break-even point. I hope you see the value. We can go and publish those polls there. Thank you, admin. As far as, what this looks like, this is really, really helpful to know because you're going to make all of your decisions. When somebody brought up that they wanted to learn about risk, tolerance, and how do you preserve financials. You got to know you're covering that break-even point on all of those frequencies, if it's weekly, monthly, whatever it might be. Because how can you ever increase the budgets on marketing? How can you ever know when it's the right time to hire someone? You have to know these numbers like the back of your hand, and that you're so critically clear on what the requirement is, everybody in their roles as employees. So that way, that's how you share financials. We always get asked, should you share financials with employees? No, you don't need to. What you need to do is work the financials backwards to be able to go say, I need 19 cups an hour. This business does not work without 19 cups an hour. That's all you need to say. It's the same thing as saying, we must hit this much revenue per hour. It's just a way that they can understand it a bit more, all right? So we're gonna go ahead and end that poll there. Thanks for that, for the help. I've now helped you kind of get some general terms, right? We know how to break down the financial equation. We know what gross margin is. We know what net margin is. We talked about per widget analysis. We even talked about how to understand your break-even point. I at least am now getting some people in here on this common language, so maybe you've identified, I need to go work on this. And that's really the purpose of this webinar, like I said in the beginning, is to just get you started So then you can go work on it either one-on-one with one of our advisors or on your own. So now I'm going to move to planning. And I'm going to talk about what does it take to successfully plan for a business. And I love planning. If you know me personally on this call, you know, if you've ever worked with me or my advisors, we love planning. We believe without a plan, you're destined to fail. And so as I walk through this, I'm going to keep it fairly evergreen. There's a lot of nuances that get into this. So again, take advantage of the Q&A. If you have a very specific question that doesn't make sense for us that we're not going to be able to answer today, make sure you use that Q&A. We'd love to get you the answer. That's our goal here, is to be the resource for you. But I'm going to hit on three things. I'm going to go through pricing. So I'm going to talk a little bit about how do you plan out pricing? How do you know you're charging the right amount? How does that connect to the whole financial suite of things? I'm then going to move into how do you build out a detailed pro forma and structure the right projections that actually allow you to see historically, but also more importantly, project the future to be able to make decisions to fuel growth. And then I've got just a couple quick hacks that I just want to share that I think are really important that all small business owners should know when working to plan out their financials. And so I'm going to talk about this pricing, and you're going to notice I've got 3 set graphs, and I bet this is just a bit small here, and I apologize about that. But it was more of a purpose of showing you the level of detail, not necessarily giving you the exact tool, because you're going to have an option to download this tool at the end of this webinar. So stay on, because I'll be able to make sure you get access to this. But we have our pricing calculator. It comes in 3 tabs, and you really have to identify, are you a product? Are you a flat fee service? Or are you an hourly service? It doesn't matter if it's a frequency of subscription or if it's, it doesn't really matter how you structure it. It's just, how do you want the end price to come out? Is it a per product? Is it a per hour? Or is it by a flat fee, meaning more of like a proposal base? And so the lemonade stand would be the product, right? It would fall underneath the product category. So the first thing when you get into this tool that we're going to give access to everybody to have is to make sure you figure out which tool or which pricing calculator you need. But I want you to notice how similar they are. Look, tell us what your ideal margin is. Tell us what the period duration is. Tell us the number of items or the number of clients or whatever is you want to have sold for that period. And then you're going to work backwards in terms of what are the fixed costs that are directly tied to the products or services, and what are the variable costs. What is it actually the variable costs that are going to come out of every widget? And yes, this is based on per widget, hourly, product, whatever it might be again. And it will actually kick out for you what your ideal price point should be and why you need to charge this. Now, this is the question I always get. But that's not what other people in my market are charging. Okay, what are you going to do about it? The model you've built, the way you're running your business to make this margin, that's the price that you have to charge. So this is why planning pricing is something that I encourage everyone to do anywhere from 4 to 8 months. Every 4 to 8 months, you should be reviewing pricing. And it's not about what's the market charging, it's how are they charging that if they're less. But contrary to belief, most of the time when we meet small business owners, they're not charging enough. One of the fastest levers we move in businesses when we work with them is showing them that they can charge more. If you want to play in the larger sandbox of your industry, you need to charge and act like the larger sandbox of that industry, all right? You have to make a conscious decision to charge what you're worth. And you can't charge based on, well, this is what I need. You need to charge, well, what does the company need to be able to grow and thrive? You have to keep money and margin behind that you're going to be able to continue to funnel towards more marketing or, again, to more growth. And so I can't go into detail with everybody on the call today in terms of how do I structure your specific pricing. That would be an awesome gift if I had a way to do that. But I can give you the tool to let you go through it. And we're going to make ourselves available. So after you download this at the end of the webinar, I want you to come back to us and let us know if you have questions, because we're going to be here to help you, okay? And if you're a client with us, please just go to your advisor to help kind of differentiate it. But this, again, is a really phenomenal tool that will do the work for you and help you understand what do you need to price. And then you can figure out all the different variables you can move to get it to the price you want and know what to expect as a model. And we've done our best to keep it as simple as possible. All right, I'm going to keep moving here. I'm going to move on now to the cash flow projection tool. And this is really what I'm referring to as a, this pro forma, if you've heard that terminology. And Cultivate has kind of created our own version of this that we think small business owners need to have access to. And I'm going to teach you how to use this document. And again, like pricing, I'm going to give you the opportunity to download this. And that's going to be your next steps. That's going to be your action from today. So you actually start to plan. It's the perfect timing. We're 3 months before the start of the next year. You need to start planning out 2019 with these financial tools. And so what you're seeing here is how to break down the revenue. And these next few slides, I've kind of taken screenshots to help zoom in so you can really see with clarity. And you're going to pick a starting date. That's going to automatically dictate the months that show up. It's all automated for you. And then you're going to put the starting bank balance. How much do you have in your checking and savings of your bank? Now, I have to say something about this. If you are still managing your business through personal financials, stop it. Stop doing that. I'm sure there's a ton of business owners on here that once did that, and they can tell you, I don't have to tell you, that's not a good idea. You've got to keep everything separate. So as you start to build out your revenue, notice it's not just one line revenue. Notice it's not 30 lines of revenue. I find anywhere from 3 to 6 revenue lines are ideal. Even if you have 30 products, categorize your products so you can see clearly how different categories are operating. You need to have a quick lens every month to be able to understand what are you expecting from these categories or revenue lines and what's the expectation. And so what you would do is you would go in for maybe the previous year and you would fill out what has happened in each of those revenue lines every month. And you may say, well, Casey, I don't have that data. Some of you probably feel that way. That's okay. There's ways to go get it. It's a lot of hard work. Or just start tracking now and then fill this document out in a few months after you get 3 months worth of data. A 3-month historical analysis is better than nothing, right? We prefer about a 12-month historic. That's usually where we get the true picture of the financials. But that's a kind of a tip if you're someone that doesn't have the financials. You haven't had your financials audited and historically ran for you in a while. And what you're going to do is you're going to actually then fill out the next year's. All right, you're going to fill out each month for 2019, right? Where is my financials going to be at? How much revenue am I going to bring in? You may go, well, I don't know how to project that. Well, I'm probably going to create a couple more tabs for you and really think through all those widgets and what your charge rates are and how many proposals. This is where you get into a lot of metrics to figure this out. But it's totally worth it because you start to see what you should aim at every month as an organization with clear-cut focus. Because again, managing financials is not just looking at numbers. It's about connecting it to all the other departments within your business. That's the hardest part. The easy part's getting the numbers. The hard part is knowing what to do with it. And it's nice to have historically ran and see what have we done and where are we going. And then what happens is every month, so after January, I'm going to come in and I'm going to put in the actuals over the plan. Because I have to rework this plan to the end of the year. Yes, you heard me. I do not believe in building a pro forma and just letting it sit. I don't care if you save the original so you can say, this is what I thought at the beginning of the year, but you better have that thing up every month and you better be putting in what the actuals were every month and then replanning, and don't move that year-end goal that you set. That's called a projection and trend process that you can follow on a monthly basis that'll hold feet to the fire and continue to keep problem solving. Because the worst thing you can do is go, well, I had a goal of 40,000 this month. I came in at 30. My next month's goal was 40,000, so I'll just aim at 40. No. That either became 42, 43 because you're going to have to make up $3,000 a month for the next 4 months to catch up, or you're going to have to make it all up next month, and that 40 now just became 50. You have a finite amount of time when you set these goals, and it's vital that you hold tension when you're going through this. I'll show you what the expenses look like. We've gone ahead and laid out majority of expenses that small business owners are going to experience. This is from looking at tons and tons of P&Ls and understanding how people structure their GL, their general ledger lines in terms of their accounting. What you've noticed is that we've given you the 3 or 4 that we believe most people have, and then we've left several open. So you can type those in, and it gives you some space where you're going to plan out. And notice we've categorized them. Again, it's really important to know what percentage or what dollar amount are you spending in each category. And this is a lot of hard work. You might be going, wow, this seems like a lot. Sure is. Sure is. An advisor can help you with this. A bookkeeper can help you with this. You want to get in here and you want to figure out what were all the historics and what were all the future, and start to really play out all the expenses. And do not just say, well, I spend $6,000 a year on this. I'm going to spread it out over 12 months at $500 a month. That's not smart financial planning. You really do need to know, I have an insurance bill that hits 2 times a year. Plan those 2 months. I'll give you the big one that most people get choked up on. I always know when it's going to be bad financials months once I find out from an owner what their payroll schedule is. Because if they pay payroll weekly or every other week, there's 2 months out of the year where they're going to get hit triple times if they're on 2 times, or 5 times if they're on every week. So in those months, you're going to feel a loss, most likely, depending on the profit margin. So I know my 2 months, and they're the most painful 2 months for our business because I have a ton of labor. And so I feel those 3 payrolls that come out that month, those 2 times a year that happens. It is brutal and it's painful. But you want to know what months are those going to be, because you're going to probably adjust and plan your business differently knowing what those 2 months are. You're probably not going to take on more cost those 2 months because you already know how painful it is with the additional payroll if you have a lot of labor. And again, this is just one of many, many examples you start to learn and navigate as you're really in tune with your financials. And now I'm going to walk through how this all breaks down at the bottom. And this is the cool part. This is what really gives you that feeling of control. It broke down your total expenses, and now it takes revenue minus expenses and shows you, well, what was your profit? But we're going to take it a step further. We're going to connect this into your cash flow. And most accountants would see this and go, no, you got to look at different reports. We think this is a management tool. So this isn't what you use for your taxes. This is what you use to manage to grow your business. And you'll notice we've got some balance sheet items. So do you have any loan principal out? Because that doesn't hit your P&L. Do you have any tax payments you have to make? That doesn't hit your P&L. Do you take any money from the business? Because unless you paid yourself on payroll, that didn't come out of there. We got to track that. And is there any other miscellaneous? So what's some of the cash that's coming out every month that doesn't hit your P&L? So you actually know what your cash is going to be. And then down here, you'll just notice it's very simple. Your cash on hand, it then takes your profit and loss, gain or loss, and then any other cash flow out, and it tells you at the end of the month what your budget will be. And you want to check to make sure that that matches what's in your bank account. And by doing this, you're going to start to project and see your cash flow. You're going to start to see what months is it really going to hurt financially. How much cash do I need to have on hand to be able to succeed and thrive, right? You need to know these things. And so without having it clearly projected, and I usually do this document for 3 years. So I can see what my financials are going to be in 24 and 36 months. Of course it's going to change, but it helps me see clarity of where I'm going and why I'm pushing what I'm pushing and when the expenses are going to hit. Or more importantly, why I'm going to put an investment into marketing or labor and when I'm going to get the return. It's not going to come till month 17 of that purchase. You know how easy it is to make a decision when you can just plug in the scenario into this document and you go, okay, I know what worst case is, I know what best case is, and I know what I need to aim at. Your confidence will thrive. You'll get out of this paralysis that some of you might be in, and you'll find yourself making strong decisions and have clear leadership out to your teams, or even just leading yourself, of what must be achieved, because you know how the numbers will work themselves out if you don't or if you do. And that is the key to financial planning. Now, I've got a couple other quick ad hocs for you, okay? Just a couple quick hacks. Really simple. A big mistake I see is they don't structure their receivable timing with costs. Let me explain what that means. I'm a lemonade. I have a bulk order. A company hires me. I have to give them 2,000 glasses of lemonade. I need to charge them a deposit up front to lock in that order. I'm probably going to charge 40 to 50% because remember, 36% of my cost is inside of COGS. So my biggest tip is, if you are in a service business where you can take different times of money, please make sure you've identified when per widget you actually experience the cost, and you allocate your financials to be in parallel with that, to make sure that you're helping cover. That will take away so much strain from the cash flow of your business. Number two, plan out your earnings. I get really frustrated when I see owners who are not paying themselves. I don't care if it's $12,000 a year because you're just getting going. Pay yourself something and put yourself on payroll. Force yourself to build a business where you make money, because what I find is that owners that do not, they more often than not end up in debt, and they more often than not find themselves scraping from the bottom of the barrel, frustrated, making bad decisions, and they end up building a business without their comp included. Now, remember to make sure you don't overpay yourself. I hear stories all the time, people overpaying. If you run a $100,000 business, the CEO of a $100,000 business probably makes 30 grand. Just perspective. A CEO that runs a $2 million business probably makes $120,000. So don't overpay yourself. Imagine if you went out to the world and needed to hire a CEO based on the revenue of your business, how much would you need to pay? You run a $10 million business? Fine. You want to make $600,000, $800,000 a year? I can get behind that. And again, it's very different depending on the industry, but something I want all of you to hear. You need to put yourself on payroll. You need to pay yourself a set amount so you keep your motivation, and it'll hold you accountable looking at your financials. And my third and final here, a quick hack before I give you some of my systems. Plan for good debt and stay liquid. People are afraid of debt. You want to grow a business. If you're in a bootstrapping role and you don't have investors behind you, you got to get comfortable with debt. And I'm not talking about bad debt. I'm talking about good debt, debt that will help you fuel growth. And I got a couple of rules for you. You need to have 2x the minimum in your account as you have an overhead. So if you go back to that fixed expenses, that $20,000 a year that I'm going to spend on fixed expenses for my lemonade stand, I better have $40,000 in cash in the bank. We normally find that majority of owners we meet do not have enough money in the bank to run the business. So you need to get a long-term loan if you don't have it, or you need to put your own money in, or you need to stop paying yourself as much to build up that cash surplus. Because when you have cash, you have a lot more options. I also have a number that I use as 2x minimum of future bad day growth and overhead. Meaning in the event that I'm growing and I'm not hitting my marks, I need to know what that number is. So don't run best case and then figure out what your overhead is. Run a bad day. Run a bad day, and that way you have the confidence to spend and take risks. And some of you may uncover, wow, I really don't have enough cash in this business to be running it. Good, that's the right problem to have. Let's go get you a loan, or let's go get you some funding or something to help you put money in the bank so you can actually run this business and not have to sweat over every single day of cash flow. You're not going to grow. You're not going to scale out unless you take that risk. And again, I think some of you on this call most likely needs to hear that. All right, we're getting close to the end. This is my last section here. I seem to be about 2 minutes behind. So thanks for staying with us on this. So we're going to talk about systems, all right? And these are just some simple systems that I follow that I think you'll find a lot of success on now how to implement some of the things I just shared with you. I'm going to talk about knowing the numbers. I'm going to talk about accountability systems. I'm going to talk about how to measure return on investment. It's one of the biggest questions we get on a consistent basis when we meet with our clients. And I'm going to give you a few of my favorite tech and automations when it comes to financials as well. So I need to know, how much time do people spend managing the financials of their business? So I don't 10 to 60 minutes a month, 1 to 3 hours a month, 4 to 8 a month, 9 to 12 a month, 13 plus hours a month. How many hours are you spending on your financials every month? Interesting. It's interesting there's no extremes on this one. Let's go ahead and publish that poll just for purposes of time. So 1 to 3 hours, It's interesting though that nobody said I don't. We have a lot of people on the call. So no one said I don't, and no one said 13 hours or more. So we hit this pretty spot on, which isn't surprising based on the number of owners we work with. But what's interesting is that it's the 1 to 3 hours a month. And, you know, I think most of you want to aim to that 4 to 8 hours a month. But if you're behind on financials, you may need to spend 13 hours a month for the next 6 months to get caught up and get your systems in place. I just want to set that clear expectation with everyone. But I think your goal is to really get in that 4 to 8 hours a month. You should be comfortable spending 1 to 2 hours a week looking at your financials on a consistent basis. If you're in the 10 to 60 minute range, We gotta pick that up. That's gotta grow. There's so many more details you could be watching that will help you make better decisions and think more critically about your business. So I'm gonna walk you through this really important message. And we use this internally. We have some jokes around it, but I just wanted to bring it to the world here. We have a phrase inside of Cultivate here, and it's the cool kids know their numbers. All right? The cool kids know their numbers. Used to be weird to maybe be a big math dork when we were growing up. You know, we might have had some of those different experiences. It's really, really cool to know your numbers as a business owner. The percentage of likelihood of you being successful is so much higher if you know these numbers. So the first system is you've got to get a system in place that you can follow that allows you to know the numbers. And I'm going to give it to you. And usually I have a lot of animation on this slide, so you can kind of see them slowly pop up. So I apologize, we have to look at it in bulk. Just with some tech errors here today, I had to do that. But the first step over here, you've got to get the accounting system set up. Until the accounting is set up, meaning you're on QuickBooks, your transactions are automatically being identified, until you get that whole thing set up and you build a pro forma on their cash flow, some of the things I went over, set your pricing, what I'm getting ready to show you doesn't work, all right? You have to have this in place first. I know some of you have this in place. A lot of you actually on the poll earlier on said, hey, Casey, I'm really good. I've got this set. I look historically. What do I do though? What do I do next? So here's my process. Here's what I currently follow every single month, all right? And you'll notice it's just a nice monthly cycle here. So the transactions are tracked. My bookkeeper does that. They manage all the details. They get it all nice in order for my P&L and for my balance sheet. And they send me each month, they send me a detailed P&L. If you don't know what a detailed P&L is, it's every line and it shows every transaction underneath every line of that P&L. So instead of just rent, it says rent, Chicago office, Vancouver office. It breaks down to the, every single transaction. I review every transaction every month. It takes me about 30 minutes and we've got a lot of transactions. My bookkeeper puts it in place, but I have time scheduled every month for 2 hours to go through every single line item, and I move transactions into the right categories if they're not placed properly. And I do this because it's how I find a lot of things. For instance, I have been double charged something once every month for at least 12 months. I always have a vendor to call. I always find some type of tech subscription, marketing subscription, or something that I'm not using, right? That our company stopped using and somehow we got charged for, or some type of annual renewal just hit us. We weren't expecting it. I track, and you may go, wow, what's the point? But I'm finding anywhere from $500 to $2,000 a month. That adds up really, really fast over time. It's worth my time to do that. But what I'm also doing is I'm saving my time so at the end of the year when I go to file taxes, this is easy. It also allows me to know how much at any moment am I really spending in each category, so I can know how to make decisions. Am I on track to the budgets? So I take 2 hours and I do this monthly report review, and I send back to the bookkeeper and have them make the edits and send me the final version. Now I'm going to take that from doing it in detail, and I'm actually going to, right here, I'm going to trend with my key executives. So I'm going to get my department holders, I'm going to get them into a call with me. I'm going to share the financials, and I don't have to show profit. I can just show different, department expenses, whatever you're comfortable with. But I'm actually going to show them, here are all the expenses. Is this what you're expecting the next few months? Is there any big expenses coming? No? Okay, great. Now let's look at our revenue. What are you trending? What do you expect from your department as far as revenue? What are we expecting to see come out of this? And every month I'm trending what I think the next few months are going to look like, and replanning on that pro forma, because it makes me change. It makes me pivot and realize I have to do things differently in the business to ensure I achieve the financial goals that were set out for me. We do a hard projection. We make some hard decisions. Sometimes that's to cut back on a staff member. Sometimes it's to spend a ton of money on marketing and go for it. We make hard decisions with the data, looking at what the budgets were at the beginning of the year and where we want to get to. And the next month, we do it all over again. And this is crucial. This is how me and my executive team, we stay involved, we see the numbers, and we make the right decisions to grow and scale the business. And it's something that I hope all of you will do. It's a very simple process that can be followed that you'll find a lot of success with. So again, we'll email out the screenshot of this photo, or we're also going to be sending out the slides. If you'd like them, you're going to be able to request those. So you can get this, but it's a very simple process, and our advisors are happy to help you get it implemented as well if you need it. So let me move to return on investment. This is really my last tip here. Total revenue minus total cost divided by total cost times 100. This is the equation for return on investment. I'm sure some of you on the call know it, but I continue to walk into meetings and I continue to see clients that work with our advisors not know how to run simply return on investment. So it's really straightforward. I'm going to give you an example. So I've got an example of, do I want to spend a $1,500 radio ad on my lemonade stand? All right. And the revenue is $2,000. And when I first originally run this, all right, I actually have to spend, it's a $1,500 expense. I divide that by 1,500, I times it by 100 to get to a percentage. My return is 6.7%. If I get $2,000 in revenue from spending this $1,500, I made a 6.7% return. But you'll notice I have the hash crossed out. And the reason why is because you did what most people forget to do. They don't think of all of the costs. I didn't say the cost of the radio ad. Remember those cogs? Remember the cost of ice, the cups, the sugar? I've got to add that 37% on the 2,000 of revenue to that 1,500, which actually brings it to a negative 10% return. Not a good decision on my part, right? Not the right decision. So I was able to clearly run and figure out how much revenue do I need to get a rate of return. And most people are commonly asking me like, well, what's a good rate of return? It's always different. You'll know if you have your performa. You'll know if the return works inside of your financial performa. Let the data and the cash flow tell you it's good. But I want to tell you something about when I did this $1,500 ad. I thought it was going to be a negative 10% return. And this is obviously pretend, but this is commonly what we see happens. I actually got 200 more guests throughout the year that said they heard about us on the radio or referred. And we had 275 more people referred because we have a word of mouth referral rate tracked at 0.4, meaning every person is referring 0.4 people to my stand. And then I just happened to get really lucky. And one of the people who came was the mayor. They took a picture and they posted it. It went viral in my community and I exploded in my lemonade stand. And I say that because sometimes people get so rigid on how to run rate of returns, they don't realize actually how to look at lifetime rate of returns and understanding what the value of a decision can be. You have to take that all into account when you go back to use this equation. Here it is. Total revenue minus total cost divided by total cost. All right. I've given you a lot of information. Here are my favorite apps. If you need an accounts receivable tool for invoicing that sends automatic notifications and can actually even convert people into collections because you have a massive accounts receivable issue, you need to start working with FreshBooks. If you don't have your financials set up on some type of system already, please use QuickBooks. They're the best for small business, the most affordable. If you don't have a strong payroll system that's automated that lets you see all the financials involved with your payroll, my favorite is Gusto. And if you don't have an expense system for all your employees that automates this so you can easily figure out what expenses are going on what line of your P&L, my favorite is Expensify. These are some of my favorite technologies. I've vetted a lot of them. I've used all of these in my own business, this business, when we started at different stages. Strongly encourage you to check them out. So stay with me. Let me give you some resources here. We're going to get you out of here. I've got 3 different tools. I covered the cash flow projection tool. I covered the pricing per unit calculator. And what I didn't cover was the price increase tool. We have a tool that takes your current price to what a new price will be and tell you how your financials will change. Really cool tool. So all 3 of these tools, we're going to send a follow-up and you're going to have access to. We're also getting ready to launch a poll where you can sign up for these different things. Additionally, while that poll's up, I'm going to tell you, if you're a client with us, this is what we want to do with you. If you don't have these things in place, or if you're thinking about working with us, this is how we will approach this ideal roadmap. These are all the things we're going to get into. I'd love to work with you on that. If you don't know, if you haven't worked with us before, you can always sign up for what's called a free roadmap session. I encourage you to take advantage. It's a 2-hour meeting where a strategist will work through your business, figure out what the biggest opportunities are, and show how we might work with you and what advisor we place you with. There's no obligation. So if you're not working with us, you found this valuable, and you'd like to go to the next step to get in touch with your financials and really go to the next level, we'd love for you to take us up on that opportunity. And we've got some cool community events. So our clients get to go to these half-day workshops. Our next one is on November 7th. All right, it's going to be planning out 2019. If you're a client, let us know on this poll if you want to come. We'll get you signed up. If you're not a client, let us know you're interested on the poll. And we'll work to actually get you some information and see if it makes sense to have you just come check it out once so you can get a little bit more information about what we're all about and what type of owners you'll meet in our process. Obviously, we do these webinars. So the next webinar I'm doing is on December 5th. I'm going to be talking about the different systems it takes to scale. I'm going to show you my favorite systems to build out in every business that I believe can get you exponential scale. Hold on, it should be a really fun ride. So if you want to sign up for that proactively, so you get all the notification reminders for it, we do have that already locked in here on the poll. So go ahead and find that as an option and we'll get you there. And we've launched something called peer development groups. And our first one is actually October 12th. It's going to repeat every other Friday at 11 a.m. Now, this is for clients only. We do have a program that's a lower monthly fee that you can just do these. But imagine getting on to get a little bit of training like this for 10 or 15 minutes and then getting broken out into virtual roundtables with 3 or 4 other owners that you get to have a conversation with. You get to network with. You get to get their perspective and ideas. We're bringing this community full force to all of our small business clients. If you are interested and you want to learn more, let us know. Choose the options here that you'd like to attend the peer development group this Friday because we'd love to get you access to learn more about it. Again, we'll let you go one time just to experience it, but then you do have to become a client to take advantage. The only thing we give out are our webinars and our podcasts. And lastly, we have got a conference we just finished a few weeks ago. We had 200 people there. It was awesome. Day and a half, we had a bunch of fun. If you want more information about Catapult 2019 and you want to be on the RSVP list for the moment we launch, let us know. Clients, just remember, you get to go for free. We announced that at the conference. You now get to go for free if you are a client. That is included in your service package with us. And I'm going to jump ahead here just for purpose of time. So here's what I'm looking for. Choose your next steps. I gave you a lot of different resources. There's a lot of different things here on this poll. I encourage you to tell us how we can communicate. We don't want to spam you. So you just tell us what you want and we'll reach out only on those things. But I also want to know, what are your biggest takeaways? So I'd love if some people would get in the chat room and tell me, what is all the details that you've learned today? What's 1 or 2 things that you do not want to forget that you want to implement into your business moving forward because of this webinar? What's a decision that you made while you heard this call, or even you want to go explore? And I just love if everybody can stick around, watch some of these responses coming in. They're going to start to get written in, and I think this is really cool to see what learning people have, and it helps us curate our content to go deeper on certain things. Any final questions that are one-off, use the Q&A. Thank you, everybody, for joining. I apologize for the technical difficulties up front that I had, but we got through it. Keep being awesome. Keep running your business, and we'll see you next time. Thanks so much.